nieces, hello nephews, it's your Uncle Charles here, and today is Saturday, May 21st. I'm gonna talk about a little bit of the technical analysis from Friday, May 20th, and I'm gonna do a macro level analysis today, okay? Meaning I'm gonna be looking at the weekly chart. But first, this is the flow sentiment, all right? Very bearish, 93% in the puts, okay? 500K premiums or above with expiration date within 1 month. That's my filters. Very, very bearish still in the short term when it comes to these big money guys. Okay, 6.2 million premium right there. 372 strike price. And it's interesting because I talked to you guys about if we lose that 380 support, what will be my next target. I said 376 and 372. So there's some people that believe we can get there. But whether or not they're going to be right or wrong, we shall see, okay? So let's take a look at my Discord, okay? I gave some call outs today. Well, yesterday I gave some call outs. All right. I only had a bullish case scenario if SPY cleared 394. So if you recall from Thursday's video, I said we had a resistance at 394. I'd be bullish if we can clear that. Okay. But SPY never cleared 394, so we dealt with my bear case scenario, okay? So I put here, I will look for puts if 392.5 fails. All right. Play it down to 390, 387, 385, 388 to 381 zone. Okay. Those were my price targets. Look for puts if 392.5 fails. Okay. That was one of my alerts. I also wrote an alert here. The best time to look for calls is the recapture of 385. To play the false breakdown, or the 380 to 381 support zone. Okay, so pretty much I had 3 trade alerts, if that's what you want to call it. Look for puts at 392.5 fail, buy the recapture of 385 if we can recapture that if we lose it, or look for support in the 380 to 381 zone. Okay, these are all written before the move. All right, so open up the day here. This pink line is my 392.5 level. Okay, so I said look for puts at 392.5 failed. I entered my first put around 950-ish, 945-ish, because I saw that SPY was dropping below 392.5. But as you can see on that candle, even though it dropped below it a little bit, it closed above. Okay, so my first put was a no-go, I ended up getting stopped out. However, the second put came on the next candle, where I did the same thing. I just followed my strategy. I entered to put on the breakdown of 392.5. I think I entered around 392-ish. And it worked out this time. So first one didn't work out. I had to cut my loss. Very, very important to respect your stop loss. If you will not be a profitable trader if you don't respect your stop loss. Okay? It's just that simple. All right? If you can't get over that hump, then you're not going to be a profitable trader. Okay? So boom, enter the put there, wrote it down to about 390 to 391. I took some profits and left a runner and was lucky enough to able to catch pretty much this whole move. I shaved off some more profit around 385. Then when it got to the 380 to 381 zone, shave off some more profits. So very, very profitable day at this point. Was able to catch this nice move, and it was alerted in Discord. Now, I said what was the next trade? Enter a call if we get to the 380 to 381 zone. This candle here got as low as 380.55. It got in my 380 to 381 zone before shooting back up, okay? And it actually went all the way up to 385. And what was my next call out? Buy calls if we recapture 385. We recaptured it here, back tested it as a support here, and pushed all the way back up to 383, 389, 390-ish. Okay? Very, very profitable day yesterday, okay? But let me turn your attention to the weekly chart here, okay? Talked about this multi-year trend line for quite some time, this orange one, right? Now, since this is a weekly chart, each candle represents 1 week, and we have now an official weekly candle that has closed below that multi-year trend line, okay? So if you remember from the back test and go strategy video in the description below, when I talk about my favorite strategy that I use to trade the stock market, is the back test and go strategy. So with that being said, the back test level for next week or this upcoming week is 396. Okay, 396. Been talking about that level all week, and we will continue to talk about that level next week. That is the back test level. I will only be bullish if SPY clears 396. I am a price action trader. I don't care about biasm of a bull or a bear. I don't care about that. I just go by what the price action tells me. If it meets my case, my scenario, I will act upon it, which means 396. If SPY is above that, I will look for calls. That will be, I will play the false breakdown. It will be a very bullish recapture. Okay, especially with us making this new lower low right down to that 38.2 retracement level. If we zoom back out here, I have my retracement level from the March 2020 low all the way to the January 2022 high. You see, we got that test. Now that we tested that 38.2 retracement level, that was a very critical level, 380 to 381 zone. Talked about it in Thursday's video, if you recall. All right. And now that we tested there, a critical level, we got the bounce. So if we clear a critical resistance, remember I tell you guys, I like to catch the second leg up, right? I let the first leg play out and catch the second leg up. This would be considered the first leg. And if we go for the back test and clear 396, I would be bullish. That is a bullish recapture, playing the false breakdown. But if we're going to look for puts next week, if you're a bear and you want to look for puts next week, that will be the level to look for, because that is our back test level, a very critical level. Okay? If we reject from 396 or as long as we're below 396, I will continue to be bearish. All right? We hit my 380 to 381 price target. Can we break 380? Because if we do break 380, I think we could sell down another $10, which would be down to 370, 372-ish. All right. Keep in mind the next Fibonacci level is at 349.59. So if 380 fails, that 50% retracement is all the way down to 349.59. Do I think it'll drop that low? Maybe not. Okay, I'll have to see more price action to see what the price action shows us. As of right now, we are getting that bounce. How many weeks of red is this? 1, 2, 3, 4, 5, 6, 7. 7 weeks of red. You guys tell me when the last time you saw SPY with 7 weeks of red. Okay? We didn't even get that in the COVID crash. We didn't get that in the 2008 crash. This is record-setting stuff. Okay? But still, as much as cool as it is to witness history in the making, I'm still going to trade it level to level. On the weekly chart, we did not lose this bull flag just yet. Okay? So the bull flag support for next week is 388. Below 388 is a breakdown of this bull flag. All right, so far it's still technically holding. We do got some washes below, but we did not close below. Okay, so therefore it's still intact. So as long as this bull flag support's holding, and if we can clear that multi-year trend line at 396, I would be bullish. Okay, keep it very simple. Weekly chart, it's good for swing trades. Above 396, swing trading calls is the way. All right, below it, I wouldn't recommend swing trading puts, because, you know, in a downtrend, correction mode, or even a bear market, the short squeezes are violent. All right, and as you can see lately, SPY's been making some massive move, $10 moves up, $10 move down. You don't want to get in that mess. Okay, so yeah, 388 is critical support. If that is lost, that's a breakdown of the bull flag. Very bearish. Okay. Below, above 396, I'm gonna say once again, recapture. That means the bull flag support hold, and we recapture a very critical level. I will look for calls. Okay, guys, does that make sense? I hope that made sense. Taking a look at the VIX here. This is not a weekly chop, but it is a daily, and we're still chopping inside of it. All right, and once again, we lost that 29.71 level. So yesterday it closed. Well, Thursday VIX closed below it. Yesterday we got above it, but still managed to close below it at the end of the day. VIX has not been, VIX has been very tricky lately, okay? But, yeah, we need above 29.71 to put 32.36 in play to be bullish, okay? Breakout level of the triangle patterns around 33.2 10ish. Okay, that's very bullish. A bullish VIX is usually a bearish SPY. Lately hasn't been working too well though. Okay, but as long as below 29.71, support is the 5-day moving average around 28.6ish, 28.5ish, 27.5 below that, and then the support of the triangle pattern around 25.5. It's going to be very critical it holds, because if it fails, that's very bearish, which should be bullish for the SPY. All right, and here's QQQ. I also got it zoomed out weekly chart. It did hit the 50% retracement level around 286.7. We had a nice wash below it, but we still closed above. All right, 286.7 is a must hold. Usually around the 50 to 61.8 retracement level is usually where the correction ends. Okay, I'm not a big Elliott wave guy, but you know, does kind of look like an ABC correction here. All right, with 61.8 retracement at 257.8. Okay, 286.7 is the 50% retracement level. So far it's held. Okay, so we'll see if it continue to hold. I think the next critical resistant level is around 307.7. That's based on the 5-day moving average, with the 38.2 retracement level at 315.6. Okay, guys. So watch that level, that 286.7 level. If that fails, very, very bearish, and the correction continues. All right, or bear market or downtrend, whatever you want to call it. And here is Dow Jones, also a weekly chart here. Didn't quite hit my fib level of at the 38.2 retracement level, but you look at the 23.6 retracement level. That's at 325.54. You see what happened in the last 2 weeks. We closed below that twice, 2 weeks in a row. That level was treated as resistant 2 weeks in a row, okay? To be honest, I'm bearish on Dow Jones, and I will only look for calls if it can recapture 325.54. Recapture that level. As long as below, I'm bearish, okay? Next critical level is around 298. That's that 38.2 retracement level, okay? And look at Tesla, weekly chart of Tesla. I also have the fib levels here all the way back in September of 2019, actually, of their low all the way up to the November 2021 high. Okay, and recently Tesla did test that 50% retracement level around 654. It went a little below it, but managed to close at 663.9 this week. Okay, so 50% retracement level was tested. We got the bounce. If they continue to hold, okay, we're talking from a swing trading perspective here. All right, more upside can be in play. Okay, but if it's lost, I got the 61.8 retracement level around 500.8. Okay, very bearish, below 644. Okay, and look at Apple. Here's Apple. This is a daily chart. Let me go to the weekly. I'm doing macro levels today, and we also tested a 38.2 retracement level around 133.47. Washed below it a little bit. All right, my fib levels from the March 2020 low to the December 2021 high. Okay, so that 38.2 retracement level has been tested. It needs to continue to hold to see if we can end this correction, or at least get a relief rally. Okay, below 133.47 puts the 50% retracement level in play around 118.19. Okay, nice big drop. So the question is, are we headed into this bear market because we have tested it a few times, or are we finally going to turn things around and get a nice relief rally, maybe end the correction? I don't know. We'll see. But it's extremely exciting, and all I can say is, guys, just let the price action guide you. All right? If you guys need some help, you love to trade the SPY like I do, consider joining my Discord, and we can navigate this market together. All right? So thank you guys so much for watching. Have a more than awesome and safe weekend. All right? Talk to you guys soon.